The cash problem no one talks about. Cash feels simple, right? You hold it, you spend it, end of story. But behind the scenes, banks absolutely hate it. Not because it's old-fashioned, but because cash is the one thing they don't fully control. Every time someone pays with cash, the bank earns nothing, collects no data, and has zero idea what happened. It's basically an invisible transaction. For banks, that's a nightmare. So they've been quietly pushing us toward NFC, tap-to-pay, and digital wallets, because that's where their real power begins. Today, let's break down why banks want cash to disappear. The hidden cost of cash. Cash looks cheap, but it's ridiculously expensive for banks. They have to move it in armored trucks, refill ATMs, install cameras, hire guards, check for fake notes, replace torn bills, and secure it. Every single step costs money. Even ATMs alone cost thousands every year in maintenance. Now compare that to digital transactions. No transportation, no security, no counting, no machines breaking down. Tap a phone, swipe a card, and boom, the transaction happens instantly. For banks, digital money is like going from manual labor to automation. Cheaper, faster, and far more convenient. Where the real profit is. Every time you tap your card or phone, the bank gets paid. Merchants pay a tiny fee for each digital transaction, and those tiny fees add up to billions every year. But with cash, zero profit. If everyone used only cash, banks would lose a massive stream of income. So of course they push digital payments. They're basically earning money every time you buy. Data, control, and the power behind digital money. Digital payments don't just move money, they generate data. Banks can see what you buy, when you buy, how often you spend, and even predict your behavior. That data helps them design new products, approve loans, block suspicious activity, and control risks. Cash doesn't give them any of this. It's anonymous, it's unpredictable, it's untrackable. To banks, that's like working blindfolded. But with digital payments, they have full visibility and control. They can freeze accounts, reverse payments, monitor patterns, and manage the system easily. With cash, none of that is possible. The cashless future. They're building. Around the world, ATMs are disappearing, stores are going cash-free, and people are tapping their phones more than ever. Banks love this shift because it gives them efficiency, profit, and control. Governments support it because digital money reduces tax evasion and makes the economy easier to monitor. But here's the twist. A cashless world also means less privacy, more dependence on technology, and vulnerability to outages or system failures. So as banks push harder toward digital money, we have to ask ourselves, are we gaining convenience or slowly giving up the freedom that cash once offered?